Today we're going to go ahead and talk about tips for a smooth year-end transition, which is about ending the fiscal year for the tribe or for your funds. And we'll be covering a little bit of Workforce Go to talk about how payroll expenses are posted at the year end, a reminder about PAs for the end of the fiscal year if your funding sources are changing. We'll briefly talk about MARTIS and what happens with our change requests, when we should filter for the fiscal year, and how the carryover process is done. And then we'll end in Intacct, going through some examples for some documents I found and some reports that will be helpful in taking care of some of the activity that's been posted to your accounts. So as we talk about Workforce Go, at the end of this year, our pay period overlaps both fiscal years. And I also mention, if you have questions, please use the chat box on the bottom right of your screen. You put in a question at any time and we'll address those as we go along. So the Workforce Go pay period this year overlaps both fiscal year 21 and 22. Even though it's just one day, that still affects the way our payroll will post this year. And so we have September 30th, which is the start of the payroll, and the end of the payroll is on October 13th. So when we post our payroll expenses for the year, we actually are going to divide it just by the number of days represented in the pay period. And so we can see that on screen here, where since there's one day, divide that by 14, and approximately 7% of our payroll cost for that pay period will be posted to fiscal year 21. And the remaining 93% will be posted to fiscal year 22. So typically we're accustomed to seeing our payroll posted on the day of payday. So like yesterday, if you looked at your financial reports, you would see all of payroll posted to that payday. But at the end of the fiscal year, we would see the 93% charge to the October, 20th payday, and then the 7% charge to September 30th. And this is what those entries look like. On the left, and then with the green background, is what a typical accrual looks like for payroll. And so if you look at your general ledger reports, or if you've gone that deep to look into how this stuff posts, when we get paid like we did on Wednesday, the journal entries in Intacct are posted through Workforce Go. And that's done by posting a credit entry to an account 14900 called due to payroll, which is the indicator that if there's a credit balance in that account number, that your funding source owes payroll for the cost of the employees paid out of the funding source. And then the double-sided entry is the debit is going to the payroll expense accounts. And so that's what our stuff typically looks like. But when the year ends, for the 7% that's going to be charged to fiscal year 21, instead of using 14,900 due to payroll, we actually use what's called 20,000 accrued payroll. This is the payroll we accrued because of the split in the pay period between fiscal year 21 and 22. The payroll expense accounts are still a debit. So if you're looking at your program's trial balance or a general ledger report, these are the two account balances you would see on those for 14,900 or at the end of the year for 20,000. Your expenses don't change; those get posted just as they normally would, but the accounts used will change a little bit. And to support this, because of the overlapping year, we need to make sure we've prepared any new PAs that we need to update funding sources or cost centers for staff. If we're in the general fund, or we get paid from indirect costs, the casino revenue, that kind of stuff, your funding source likely isn't going to change. But for those who are working with grants or contracts where the funding source may change because of a new fiscal year, this would impact the employees that are paid. And so we have a couple of responsibilities. We have to be able to get the new personnel action in the system so that the program monitors can assign your employees to the new funding source. But you'd also have a responsibility for making sure your timesheet correctly displays that one day is to the outgoing funding source from fiscal year 21, and the other 13 days would have on the timesheet for fiscal year 22. If for whatever reason we're unable to do that, we don't get the funding source updated in time for our staff through a PA, or it's not shown on a timesheet, employees will get coded to get paid from the outgoing old funding source, which could result in delaying the accurately reported information for our costs. And depending on what happens there, this is going to cause the program monitor to have to do what's called a journal entry to reclassify the expense from one funding source to another. If this information isn't seen immediately, we may end up reporting the incorrect charges to the original funding source. So now we have to amend our reports that we filed with the funding agency, which may also result in drawdown issues if we've asked for the original fund to pay for charges that the new fund was supposed to have assumed control of. So just make sure as we're looking at the end of the fiscal year, we're taking those things into consideration, in particular for grant or contracts where the funding sources change each year, or if the end of your funding source is approaching, you still need to think about that. And then briefly, we'll talk about Martis. So at the end of this fiscal year, when we log into Martis currently, when we go to do a change request, we all see some sort of screen like this, but it tells us we're working in fiscal year 21. So obviously when October begins, this fiscal year is going to change. So when we log in, we're going to see fiscal year 22, which is fine for all new funds that we work on. That's what we're going to work through. But we need to be cognizant of this, that if there's a budget mod we need to make to pay our old bills from the prior year, we'll have to make sure that we choose the fiscal year we're going to work on and then click filter to load that year's budget. Martis only displays or allows you to work with one fiscal year at a time. So we need to make sure that we're filtering before we begin our new change request. So if you're unsure of which fiscal year to use for your budget mod in Martis, there is a report called Intacct Budget Comparisons. We do have a handful of people in here. I don't know if you've used that report now, but if we go into Intacct, go to reports and then to our report center, you can use the search bar here, type a report name. So as I start typing the Intacct Budget Comparison Report, it brings that up. And so if we're unsure before we start doing our budget mod in Martis, what fiscal year our budget sits in, we can come here and look that up. A funding source for commodities. When this report loads, the column header tells us what fiscal year the budget is in. So when October 1st hits and Martis changes to fiscal year 22, when Ruth logs in, this budget isn't accessible in Workforce in Martis until she changes this year to fiscal year 21 and then clicks filter. And at that point, she starts doing a change request. She'll have access to these line items to begin a budget mod to make any changes needed to accommodate paying the old bills. And we have a chart here that just I'm trying to use as a guide to help us. If you get funded from the general fund, indirect cost, and casino, any new request you have starting October 1st, you're going to use fiscal year 22, so you'd have no reason to change the fiscal year in Martis. If you're making a correction or change to your budget to accommodate paying an old bill that wasn't paid during fiscal year 21, you can then switch to fiscal year 21, prepare your change request, and submit that. If you're funded from a 638 program, whether that's BIA or IHS, you're going to use the fiscal year that is the source of the funds. So you might already be filtering as it is now into a prior year, but you continue to use that year when the new year starts. Federal, state grants and awards, they use the fiscal year that's the source of the funds as well. So even with the new fiscal year beginning, we'd still want to use the budget year that the budget is sourced in. So whichever fiscal year the grant began. And then the last part are the revenue funds. Any funds received in fiscal year 22, they would continue to work within fiscal year 22. If there's unbudgeted revenue from fiscal year 21, they would filter to fiscal year 21 and budget those revenue funds until the carryover is complete. And so the carryover begins in November 15th. So from October 1st until November 15th, there will be no carryover activity performed by a program monitor. And here's the funds that have carryover activity that's done by a monitor. Notice no for general casino and direct, no for 638, and no on federal, state, or other types of awards. The only place where we're performing carryover activity in Intacct is with our revenue funds. All other grants like 638 or the federal, state awards, within Intacct, the funding source operates by just a period of time. So we can say, if the funds began October 1st of 2020, we tell Intacct for that specific funding source, start recognizing the budget on 10/1/2020. And if that is a 2-year grant, the end of that budget in Intacct would say 9/30/2022. So Intacct would recognize that the budget is valid and usable for that entire period of time. And it wouldn't require the monitor to have to do a carryover process in the middle of the budget or in the middle of the life of the funding source. So typically that's performed after the tribe's books are closed, which is around November 15th, depending on what day that falls on. Carryover is processed each year to move the fund from the outgoing fiscal year into a new fiscal year. The program monitors are responsible for performing this activity. At this point, for this specific process, there's like a program user wouldn't have any responsibility in doing the actual carryover process. And this is based on the trial balance for the fiscal year, the fund that just ended. So they would run a trial balance report from October 1st, 2020 through 9/30/2021. So this allows us to take into account the budget, the revenue, and any outstanding or accrued expenses that haven't been paid, and of course all those that have been paid. This lets us determine the amount of spendable funds available as of 9/30, so we can make that the carryover on 10/1. So even though the monitor is solely responsible for doing the actual act of carryover, program users do have some responsibility for this, in that all revenue programs must have any open purchase orders closed by November 15th. Whether you're doing that through making a payment or you're converting those to a closed partial purchase order. All outstanding bills must have been submitted for payment and dated 9/30. Processing any request payments after the fiscal year has been closed may contribute to a delay in determining carryover and could inadvertently affect the reliability of any carryover balance determined before your payment. In other words, if on November 15th we've announced that we've closed the books, and then a month later you're seeking permission to pay an outstanding bill from the prior year and want to accrue it to that prior year, if the monitor has already done the carryover, the amount of that request for payment also affects the carryover, which affects your new fiscal year budget. So carryover cannot be calculated until all outstanding activity for the prior year has been resolved. So we just want to be careful with that and make sure that once October 1st hits, we're in the mode of we've got to make sure we close out that old fiscal year. Monitors start with the cash balance and then review their balance sheet accounts to determine how much is available. And then they make a journal entry. The one that we'd be concerned with as program users is the credit to account number 49900 for fund balance. Once we see that credit on our financial reports, that tells us we now have the funds available to budget for carryover. And this is what a sample would look like on November 15th. A monitor would run a report and they may get someone's cash balance as being $463,000. Unpaid accounts payable totaling $257,000. So the amount available to move forward to carry over is $206,000. And so a worksheet similar to what we see on screen is prepared. It's included in as a supporting document and a journal entry they make that eventually lands as showing a credit to your revenue account for, in this instance, $206,000. At which point you can then budget into your expenses as part of your carryover budget process. And at that point, the revenue funds are consolidated and they can go back to using fiscal year reports and working in Mortis and only the fiscal year. So if you have questions about Mortis, please share them in the chat box. Otherwise, we are moving forward to Intacct. So here's the brief agenda we'll go for Intacct. We have inventory that we're going to talk about, transactions in limbo, and these are the types of reports we're going to visit as we look at transactions today. And so once we get into this, we'll be looking in Intacct more than we will this slide deck here. And then we'll end with talking about encumbrances and commitments. So we basically have two types of inventory that programs should be maintaining on a perpetual basis. We have capitalized equipment, which is on the left. Those are items valued at $5,000 or greater. Things like machines, trucks, large computers, office furniture, that type of stuff. And then on the right, non-capitalized equipment from $500 to just below the $5,000 level. We should be maintaining an inventory describing those items, listing those items, and so forth. And here in the finance office, property manager is Santiago, so you could work with him on providing that information to him to update so that we can reflect that on our finances, current with whatever equipment you may have purchased during the year, or any equipment you might have transferred or disposed elsewhere. So let's start talking about transactions in limbo. In Intacct, as the program user, one of the first areas we want to be concerned with are standard purchase requisitions and contract purchase requisitions. And in particular, any of those transactions that say they're pending or in progress. That tells us that we've received approval on those requests, but we haven't taken the next steps to make them paid or to close them. So they're affecting our budget. There's an encumbrance from that there. And it's just the pending or in progress status is waiting for you to take action with. So we need to locate that information and then make a decision on what to do. In Intacct, the best type of report to use, or the best way to view this, is called a purchase custom view, which we use every day. You might not even realize it. But if we go to where purchase requisitions are, this screen here is called a custom view. Basically, it's a purchasing custom view. This indicator on the left, below where it says purchasing, says all. And depending on what you've used, it might say something else. But when you click here, you have a list of different views that's available for you to use. So I made one just training one just for this one. And what I did was I created this to show for fiscal year 2020, or sorry, for fiscal year 2021, show me all standard purchase requisitions that have a status of pending or in progress, as this slide says. So if you were to come here and use one of the custom views to search for this, or to create your own custom view, you would get a list of all the stuff that's waiting for action to take from a user. So for example here, we have this purchase requisition here, PR 49889, for this vendor. So I have it showing the vendor number instead of the vendor name for this particular view. It's pending and it's worth $600. So for this particular funding source, On November 12th, 2020, we opened a purchase requisition to that vendor for $600. And since November, so now we're going about 8 months, we haven't taken any action to address whatever the request is for. So depending on your budget, the $600 hold can be quite significant, but it's certainly what it's doing. It's preventing you from using the $600 on any other business. So if we come in to use the purchasing custom views, so we have like the created by one is similar to this, but has all the names and stuff on there. So if you use that, you can go to the created by in the state, type pending and hit enter. You would get a list of all of the pending purchase requisitions for your program. Well, we can see this one here has a $600 hold on our budget, and this would require us as users, we need to make a decision on what to do here. We know that it's pretty old, but what we need to do is figure out has this thing been paid? Did we conduct business with this vendor? And then from there, we can decide on what we need to do. If this was a requisition we've made and we're no longer we didn't do business with this vendor has nothing due to them, we could convert this into a purchase order and then close the purchase order so that the $600 encumbrance against our budget goes away. So we're going to go to the report center and we're going to look up this program. So while that runs, we know we'll focus on line number 75160. On any of the transactions that are pending, we could also click Show Spend Insight to see specific information about this line. We have our report. So for this line item, it's had a $600 encumbrance held against it, which we know is that purchase requisition. And so it's preventing us from potentially spending $600 more on our funding source. Now we know the hold, we've confirmed that hold. It'd be up to us to contact this vendor to confirm whether or not we've made payment to them or if there's an outstanding bill that we need to resolve. If we weren't sure if we paid them, our first step could be a report in Intacct called Purchasing Transaction Detail. So we have it looking for the fiscal current year. We're putting in the information, we're telling Intacct which checkbook and program we want to look at, which funding source we're using, and the vendor. You can specify a line item if we wanted to, or a purchasing transaction type. If we only wanted to see purchase requisitions, we could do that, or purchase orders. So if we looked at just this vendor, we've had no other activity with this vendor for the year. So we definitely didn't pay them in another way. So at this point, we know we haven't paid them. Now we can make that determination. Did they or did they not bill us? Did we do business with them? And then do we need to close this? Or do we need to pay that invoice that hasn't been paid? And so that's our standard purchase requisitions. And again, the purchasing custom view is a great way to find out very quickly the list of stuff that you have to take care of for your program. What we'd also be concerned with is our purchase orders and contract service purchase orders. And in particular, these 4 purchasing states on the screen: pending, partially converted, in progress, and draft. Just like the purchase requisitions, this is telling us there's transactions that are waiting for us to take action on. Because they're in this status, there's a hold against our budget. So if we're expecting to be able to continue to spend money, especially with the end of the year upcoming. We need to make sure we're taking care of these things long before they become a problem. And so just like purchase requisitions, we can go into purchasing, go to order, then purchase order if we're going to look at purchase orders. We have this spot here that lets us know we can switch to different types of views. This is showing all activity for the tribe as it's happened since we started using Intacct. So 53,000 purchase orders. We do have one view called FY21 Open POs, so you can use that. That only displays to you the transactions that would fit this description. And then we have one I made just for the video. And so from here we can see that we have converted transactions. We have the purchase order number, the date they were created, the vendor name, where it came from. And so if we're in a view like this and we need to make an adjustment, we don't want to see just converted, we want to be able to see our pending. You want to make one for yourself. You can take a view as it is now, and we're going to create a new view, and we can choose the fields we want to add to it. I've got document number checked, state, vendor name, reference number, date. So if we don't want the reference number, we don't want the type in there, maybe we want the total and the converted from. So we've got these 6 areas that are checked. What order do we want these items on screen? We're happy here. We can leave that alone, or you can click on these little dots here to adjust the order of how the report will show on your screen. And that's any user can do this. We can filter the report so only specific things show. So for example, that state, do we want it to equal one specific one? Any of these other information? So we're going to use includes, because this is going to let us select multiple states. From that slide, we know pending is 1, partially converted is 1, draft and in progress. How do we want to sort this? When this comes back, I wanted to order it for us by date and then by the purchase order number. We give it a unique name. If you're creating one for yourself, do not hit deploy. Deploy would make it available for everybody, which you might have a specific type of filter on that's not useful to others. So don't click deploy. And then we click save. When we come back to purchase orders, we can then find the one that we've created. It's not going to go right to it. We're going to have to select that. And now we can load that view. And so we would see all of those things that fit the bill that where I input that. And these dates are going further back, beyond our fiscal year. So when we filter these custom views, we can add multiple filters. So if I find the date and I want it to be greater or equal to the first day of this fiscal year, now we've shortened this up a little bit to only stuff that's happening now. So when you look at your custom view, you can then begin to work on and take action against some of these things. Some of these purchase orders are from beginning of the year. And if you have something like that on your view, then you know there's something that you need to do to follow up with this. Has it already been paid through a different transaction? Is it something that needs to be paid, or is it something that we're just not using and it needs to be closed? So we have one purchase order that I wanted to look up. So we have a purchase order to Ace Hardware. And this was opened in October. And hasn't been paid since. So we can do a similar thing like we did with the standard purchase requisition. We can go to Report Center, make sure we're on all reports. I have all applications selected, and I started typing purchasing transactions so I can find the purchasing transaction detail report. And so this report's probably the most useful one for looking up specific transactions. And we can start looking this up. We know it's Mission Ace Hardware. Here's our program, our fund, and our checkbook. And this time we'll specify a line item. If we wanted to look for purchase orders, we'll say the purchasing type is purchase order, and the state, we can look for basically what was on that list before: draft, pending, in progress, partially converted. And so now when we view this report, we can see there's two open purchase orders, one from October, one from December, for Mission Ace Hardware for this particular program funding source checkbook. And so when you look at your reports like that, you can run this report and find the open purchase orders working this way if you don't want to use the custom view. It has a link to the purchase order itself, so we can go directly there and look into whatever the issue is. But now that we have this information, do we know if we've made payments to this one? So let's hit customize. We'll keep this information the same. We can select only one type of purchasing transaction, so we're going to leave this empty. If we wanted to know if we've made payments to this vendor, we can basically make that determination by using a specific state. And so the more comfortable you become in Intacct with knowing what the purchasing document states could be, we would know that basically any document for purchasing that says closed is an approved voucher or an approved justification, an approved non-PO voucher, something that became a payment. And we've got one payment. We've made an $11 payment. It's from this purchase order. So the two that we have open that are pending haven't been paid in the system either. So as program users, you probably would know, looking at this vendor, whether or not you did business with them in that period of time. And if you did, you have the invoice on file, excuse me, or do you need to contact them and ask for that invoice? Then you can make the decision on what to do going forward, whether it's closing the purchase order or converting that now into a request to pay, a voucher or a justification, depending on the invoice. And so that's looking for your purchase orders and contract service purchase orders. And as you probably see now, each of these screens are basically the same thing. You go to purchasing, you're looking for pending stuff. You're going to purchasing transaction details, you're looking for pending things. But all of these things are affecting our encumbrances. They're putting a hold against our budget until we do something about it. And we have vouchers and justifications. We're concerned with declined in drafts. That tells us we've created a voucher or a justification. And in this case, it's justifications that are converted from a purchase order or a contract purchase order. But those two things tell us there's action that's waiting to be taken by us. We've submitted at one point, and along the way, either the monitor or the finance manager has declined the request. If they declined it, that means it's waiting for us to take the next appropriate step. Was there something we didn't include with the request, so we need to make an edit to the voucher or justification, correct that information, and then resubmit? Was this something that was eventually paid through a justification rather than a voucher? Well, we still have a responsibility to take care of on the voucher because this is still holding on to a budget through an encumbrance. So in that case, we may need to delete the declined voucher and then close the PO after it's reopened because of deleting the voucher. Did we create a draft voucher and then forget to come back and address that draft so we can finalize and submit it? So those are decisions and things that as program users, you'd have a responsibility for. You can come into purchasing, go right into vouchers and look for that. So here's a list of declined vouchers I landed on. I don't know if I created one for the video. I don't think I did. But specifically, I made a note to look at this one. So we have a voucher from October of 2020 to AT&T for $18.86 that was declined. So if we wanted to know why it was declined, you could click on the blue decline link and then go to approval history. And here's the monitor telling the person that this was a September bill. So this is from a previous fiscal year. So process through a justification option and then make sure you post it to 9/30 of 2020. So let's go back to our trustee purchase transaction detail report. So instead of using the current period that's up here, we're going to type one and we're going to override that. We want to look at 9/30 of 2020 through October 9th. Here's our program, our funding source, and our checkbook. And our vendor is V1220. And that's for cell phone service. So we've given Intacct some pretty specific information. Only for this period of time, 9/30 to 10/9, for this checkbook, program, and funding source, show us all the purchasing activity at this vendor using this item code. I'm not going to specify a certain purchasing transaction or a state in this one. We kind of want to see what everything that occurred here. Here's the declined voucher for $18.86 from October 9th. We know that the direction was you need to resubmit as a justification now because the time has passed. And you need to pay this and date it for 9/30. Second transaction on this screen, dated for 9/30 as a justification for $18.86. So as a program, if we're out there looking for our declined vouchers, or we're looking at this purchasing transaction detail report or a financial report and we see that encumbrance, we know there's some action that we need to take or maybe something we forgot to take. So we have a responsibility now on what to do to fix this $18. In October, when we were given that instruction to pay justification, we needed to come back here and delete this voucher. If we go to the history of this, we know this is from purchase order 45759. Its status is currently converted because it was converted into this PO, to this voucher that was declined. So if we come back out to our list view for this voucher, in order for us to clear this $50 encumbrance from the purchase order, off of our books. We know we've paid it. We're going to delete this voucher. We can then go to purchase orders. It now says pending. And now we can close this thing because it's already been paid. We get the warning, make sure your fiscal year is correct. If this was for a previous year, that's our final chance to make that change to the date since it defaults to today's date. But hey, we're fine. This is a fiscal year 21 transaction. So we'll go ahead and override that warning by clicking post again. And now we've resolved that $50 encumbrance by taking 5 minutes to look at our purchasing custom views, using purchasing transaction detail to research this further. And we're good. We can breathe a sigh of relief for that one. And then we have paid travel advances we need to take care of. So if we have any pending paid travel advances, that means it's waiting for us to take action to convert to a travel reconciliation. So if for some reason we have staff traveling today to Sioux City or tomorrow to Bonesdale, we don't reconcile it until after October 1st. First we're going to make sure we date this and properly accrue that activity to FY21. But we can still look at our transactions and make sure we're looking in the right place. So if I go to purchasing, I go to order, there's paid travel advances. And I have this view showing travel reconciliations that haven't been turned in within 5 days of the last travel day. There's only 3 out there, so not too bad. But if any of these are on your list, if you have any pending items for travel, this is going to tie up the employee that may need to travel again in the future. This has an encumbrance hold against our budget. And so we have pending stuff that needs to be resolved. So make it a regular part of our routine here that we're coming to all of these different locations: purchase requisition, purchase order, voucher, paid travel advance, and looking for those things that tell us they're pending. So we've talked a little bit about the encumbrances. We need to learn those purchasing states if you're not comfortable with them, especially for this, the report, the purchasing transaction detail report. That thing is instrumental in finding a lot of this activity. And because you can key in on certain activity by their state, one of our biggest struggles, or the things that's going to help us the most, is knowing what state to look for. So we know the activity that matters to our encumbrances, if that's what we're searching, or the stuff that's been paid. I've kind of gone through some of these reports pretty fast, the purchasing transaction detail report or the custom view. All of that stuff I have videos for, so you could go to ljstraining.info. So if we go there, there's discussions on Intacct, different sections on how to do some of the stuff we've just done. Purchasing transaction detail reports are here. The encumbrance videos are there. Stuff on Martis, Workforce Go. So if you're not sure, you can do that. Intacct also has a help guide. So if I go into Intacct, up here we have the help and support item. On a certain page, you could hit help on this page and it'll give you information about stuff you can do on the page. It's not specific to us, it's about how Intacct works. So it can be very helpful. Or we can go to the Help Center, which is like the home page of this. We didn't know the purchasing states. I type that as a search. It'll take us right to that page. This is what draft means, here's a description. Here's what in progress means, here's its description. So we have a lot of resources available to us if we're uncertain about what to do. Especially like in the purchasing transaction detail report, the video I have just shows what we've just gone over, how to run that report and access information. Take advantage of the purchasing list views, which again are based on these purchasing states. Do we want to see a list of everything we've done since we started using Intacct? Or do I want to land on a custom view that just tells us what's happening in our current fiscal year? And the best thing we can do to get a grasp of some of this stuff, if you haven't done it yet, is visit that help guide. On the YouTube channel I have, there's a sole video just about purchasing transaction states. Or start creating your own list views and say, I want a list view of all of commodity foods purchasing orders that are in a pending status, or purchase requisitions that are submitted. We know if a purchasing requisition submitted, it's waiting for the director's approval. So if someone from SRD submitted a requisition, the status that says submitted definitely tells us it's waiting for Ken to approve. And we'll end here with talking about accruals. So in our accounting manual, it says the tribe adheres to the generally accepted accounting principles, including the accrual-based accounting method. Gist of that on page 8 of the accounting manual, or anywhere you look up accrual-based accounting. Expenditures are recognized when services are performed or goods are received. So basically, under the proper accounting method, we shouldn't be opening a purchase order at the end of September for fiscal year 21 if we're going to get the goods or services the next month. Those are fiscal year 22 activity, not 21. And so there's always a lot of a rush at the end of the year to just encumber our funds. But unless we're actually going to receive the goods or the service that we're contracting or whatever isn't performed in fiscal year 21, we should not be accruing it to that year. So as we move into September, our focus should start to be working on closing fiscal year 21 and beginning fiscal year 22. So, and of course, page 9 goes on to say we're going to conform to these principles. In which period are goods or services being consumed? Just a repeat of what I just said. Rushing to open a PO on 9/30 for goods that will not be received then does not accurately reflect activity for that fiscal year. And it's incumbent on programs to plan accordingly for that looming year end. So we shouldn't be trying to game the system. We're in the personnel office and we need $200 worth of pens. Hey, we still have a budget because it's 9/27. We can't open that purchase order and accrue it to fiscal year 21 unless we're also getting the goods in that same period. Those things arrive in October while those goods have been consumed or received then. Typically, the finance office will continue to allow the payment of goods or services received in fiscal year 21 until that date in November. Offhand, I don't know what day November 15th is, so it's going to be somewhere around that day. This allows us time for invoices to be received and processed. Fiscal year 21 invoices that have not yet been received are being paid at that point. And then all transactions should be dated for 9/30. I know when we make payments, we can choose a fiscal year end, current or prior. In the big picture, when we do that, that affects nothing as far as your general ledger or the accrual dates are concerned. This exists just to help serve as a reminder, not only to you, but to the monitors and anyone else reviewing this, that if we say it's prior year, this date better match that. So we see prior, We should then be looking at this day to make sure that matches the same period. So whatever we're doing, our dates have to match the period of time. And then for program income, it's accrued to the fiscal year in which the services were provided. So like solid waste is doing their billing. When they bill on September 1st, that's for September activity. Then October 1st is for October activity. But we don't make any changes to the revenue because of that. That revenue for September stays in fiscal year 21. There's no change to that accrual. If we're going to bill for services, or if we're Koya or KNI, they use Intacct for billing, and they're going to sell advertising space for fiscal year 22. They'd want to keep that in mind on the date they're using for the general ledger posting date, because that's a fiscal year 22 transaction and not fiscal year 21. So in the end, just rushing our items are going to lead to mistakes, so we need to take our time. We have plenty of time from now through September to start worrying about all these pending transactions or getting our items in order. If we're changing funding sources on October 1st, making sure we get those created and then doing the PA and those types of things that are needed to make sure we accrue our expenses properly. All purchasing docs default to the current day, not to the day we think we're doing the transaction for. So make sure we're checking that day. If we're rushing through, we're probably going to skip that. So we need to take a minute and verify the date and make sure it's correct. Any delay in production could affect the accuracy, reports being current and complete. And so in the super circular, that's an actual requirement for us. Our financial results have to be accurate, current, and complete. And if we're rushing transactions through and forgetting to date for a prior year, not accruing our stuff to the proper period of time, that affects our accuracy and our completed financial reports that we provide to our funding agencies. So this may cause us to file erroneous reports that later have to be amended and corrected. And of course, that could delay our carryover process as we round back to the start of this presentation. Okay, well, that's the end of what I have for the presentation. Are there any questions we have about fiscal year end or all this material we went through today? Visit ljstraining.info for other videos about like the custom views or purchasing transaction detail reports, or go to the YouTube page, look my name up, LJ Moran, and I have about 100 videos there now. So thank you everybody for your time. Enjoy the rest of the day.